What if I told you there's an industry worth over $1 trillion bigger than the entire global movie industry, bigger than the global music industry, yet most people have never heard of it, let alone understand how it works? It's not crypto. It's not a new tech startup. It's an industry that quietly underpins our entire global economy, touching everything from the food you eat to the phone in your hand. I am talking about the world of reinsurance. Now, I know what you might be thinking. Reinsurance sounds about as exciting as watching paint dry. But stick with me, because the story of reinsurance is a story of massive gambles, mind-boggling numbers, and the hidden financial architecture that keeps our world from falling apart when disaster strikes. So, what exactly is it? To put it simply, reinsurance is insurance for insurance companies. Imagine you're an insurance company. You've just insured a massive new skyscraper in a coastal city for $1 billion. That's a huge policy. If a major hurricane hits and that skyscraper is destroyed, paying out that $1 billion claim could bankrupt your entire company. That's a risk you can't afford to take alone. So, what do? You buy insurance for your insurance policy. You go to a reinsurer, a massive, globally operating financial giant, and you pay them a premium. In return, the reinsurer agrees to cover a large portion of that $1 billion claim if the worst happens. You've essentially transferred a huge chunk of your risk to someone even bigger than you. This simple concept is the bedrock of a colossal global market. Companies like Munich Re, Swiss Re, and Berkshire Hathaway's reinsurance group are the titans of this industry. They operate on a scale that is almost unimaginable. We're talking about companies with hundreds of billions of dollars in assets, whose entire business model is to analyze, price, and absorb the world's largest risks. They don't just deal with single skyscrapers. They reinsure entire portfolios of risk. An insurance company might bundle together thousands of home insurance policies from Florida and sell the risk of a hurricane season to a reinsurer. They might bundle up life insurance policies, car insurance policies, or even business interruption policies. The reinsurer's job is to look at all this data, weather patterns, mortality rates, economic trends, and calculate the probability of a catastrophic event. Then, they put a price on that risk. It's one of the most high-stakes games of probability on the planet. Their actuaries and data scientists are some of the smartest people you'll ever meet. They build incredibly complex models to predict the unpredictable. They have to think about everything: climate change and the increasing frequency of natural disasters, the potential for a global pandemic, the risk of a massive cyber attack that could take down entire economies, or even the possibility of a solar flare knocking out our power grids. These aren't just movie plots to them. They are quantifiable risks that need a price tag. Think about the world's most catastrophic events: the 9/11 attacks, Hurricane Katrina, the 2011 earthquake and tsunami in Japan. The initial insurance claims from these events were astronomical, running into the tens, even hundreds of billions of dollars. No single insurance company could have handled those payouts. It was the global reinsurance industry that stepped in, absorbing the majority of those losses and preventing a complete collapse of the insurance market. Without reinsurers, the primary insurance companies would have gone under, and millions of people and businesses would have been left with nothing. This is why reinsurance is so vital. It provides stability. It allows insurance companies to take on bigger risks, which in turn allows for bigger projects to get built. That new airport, that massive bridge, that cutting-edge factory, none of them could get insured, and therefore financed and built, without the backstop of the reinsurance market. It encourages innovation and progress by making unthinkable risks manageable. The industry also has its own fascinating financial instruments. One of the most interesting is the catastrophe bond, or cat bond. Let's go back to our hurricane example. Instead of just going to another reinsurer, an insurance company can issue a cat bond to investors like hedge funds or pension funds. Here's how it works. The investors buy the bond, and in return, they receive a very high interest rate, much higher than a normal government or corporate bond. But there's a catch. If a specific predefined catastrophe happens, say, a Category 5 hurricane making landfall in a certain part of Florida, the investors lose their money. That principal is then used by the insurance company to pay the claims. Essentially, these investors are betting that a disaster won't happen. It's a direct way for Wall Street to bet on the weather. For the insurance company, it's a way to get capital from a source outside the traditional reinsurance market. For investors, it's a high-yield investment that isn't tied to the stock market. A stock market crash doesn't cause an earthquake after all. This market for what they call insurance-linked securities is itself a multi-billion-dollar niche within the trillion-dollar reinsurance world. But it's not all smooth sailing. The reinsurance industry is currently facing some of its biggest challenges ever. The primary one is climate change. Wildfires are more intense, floods are more frequent, and hurricanes are stronger. The historical data that reinsurers have relied on for decades to price risk is becoming less and less reliable. The 100-year storm now seems to be happening every few years. This creates immense uncertainty. How do you price the risk of a future that looks so different from the past? As losses mount, reinsurers have had to dramatically increase their prices. This has a direct trickle-down effect. When reinsurance gets more expensive for your local insurance company, they have to pass those costs on to you in the form of higher premiums for your home or car insurance. It's one of the hidden ways climate change is directly hitting your wallet. In some high-risk areas, like parts of California or Florida, primary insurers are pulling out altogether because they can no longer find affordable reinsurance. This creates an insurance desert, leaving homeowners with no options and potentially making their properties unmortgageable and unsellable. This is a real, growing crisis, and the reinsurance industry is at the epicenter of it. Another huge, emerging risk is cyber. A coordinated, large-scale cyber attack on critical infrastructure could cause economic damage on par with major natural disaster. How do you even begin to calculate the potential cost of something like that? How do you price a risk that is man-made, constantly evolving, and has no historical precedent? This is the new frontier for reinsurers, and they are racing to build models and products to handle what many are calling the next big one. So, this is the world of reinsurance. It's not just a boring financial backwater. It's a dynamic, high-stakes industry run by brilliant minds who are constantly trying to put a price on the future. It's the silent financial shock absorber that allows society to function, to build, and to recover from its worst days. The next time you see a massive skyscraper, a new power plant, or even just pay your own home insurance bill, you can think about the hidden trillion-dollar industry operating in the background. The invisible giants who are taking on the world's biggest risks so that we don't have to. It's the ultimate financial safety net, and it's one of the most important industries you'd never heard of until today. Thanks for watching. If you found this interesting, make sure to hit that like button and subscribe for more deep dives into the hidden systems that run our world. See you in the next one.